The S&P 500 is testing major support today as a wave of geopolitical and tech sector stress hits the market. With shuttered transit in the Middle East raising threats of $120 oil, guidance-driven cracks are also appearing in AI leadership. Amidst the tension, the U.S. is launching Project Vault, a $12 billion strategic reserve for critical minerals. Here is the signal you need to navigate today's volatility. Today's session opened with a sharp 2.5% drop in the S&P 500, testing support at 6710 before finding some footing. NVDA noted that the VIX spiked to 28 during the slide, a clear signal of the acute stress hitting the tape as geopolitical friction in the Middle East took center stage. In the energy complex, Brent crude surged toward $90 following reports that the Strait of Hormuz is effectively closed to transit. With crude climbing 16% in just a single week, the market narrative is shifting. We are seeing a move away from the growth story and toward the rising risks of energy shocks and a potential economic slowdown. With the Hormuz transit disrupted, Investors Business Daily highlights a volatile scenario where oil could swing between $60 and $120, depending on how long the blockade lasts. While gold and silver initially spiked as safe havens, NVDA notes they failed to sustain those gains. This suggests the market is currently pricing in specific energy supply risks more aggressively than seeking broad systemic hedges. In response to these supply chain risks, the U.S. is launching Project Vault, a $12 billion strategic reserve for rare earth minerals. Investors Business Daily notes that this is designed as a long-term buffer against major systemic crises and supply monopolies, not as a tool for managing daily price volatility. Building a rare earth supply chain independent of China isn't just about the money, it's an industrial challenge that will take years to solve. Investors Business Daily notes that current non-Chinese processing capacity is still far too thin to match global demand. This means that even with the $12 billion push for Project Vault, industrial bottlenecks are expected to limit the pace of decoupling for the rest of the decade. While the reserve sets a strategic floor for the industry, the actual supply chain remains a very narrow funnel. The pressure on tech leadership is intensifying. According to NVDA, the U.S. is weighing new targeted export caps on NVIDIA H200 chips to specific firms in China. Surprisingly, the market reaction was muted today. These limits were largely anticipated and are already reflected in current company guidance. However, this regulatory headwind, alongside MongoDB's 22% collapse and the semiconductor to S&P 500 ratio testing 0.55, suggests a broader stress test. As FX Evolution noted, even credit markets are signaling concern, with widening spreads for Oracle as investors weigh the massive debt-funded AI build-out. The launch of Project Vault marks a strategic shift in U.S. policy. According to Investors Business Daily, this $12 billion reserve is built for severe supply disruptions, not just to smooth out daily price volatility. It's a long-term play, though. Because non-Chinese processing capacity is still so thin, meaningful decoupling will likely be stalled by bottlenecks for the rest of the decade. While the $12 billion funding for Project Vault is a major signal, Investors Business Daily argues that breaking away from Chinese rare earth processing is a multi-year story. The primary bottleneck is capacity. Current processing infrastructure outside of China is simply too thin to match global scale. This gap will likely slow the decoupling process through the rest of the decade. For now, investors are watching this as a long-term policy floor for domestic supply chains. This tech fragility is also echoing through the credit markets. FX Evolution is tracking a widening in Oracle's credit default swaps, which signals that bond investors are getting nervous about the massive amount of debt being used to fund those AI data centers. As the market shifts toward a defensive posture, Berkshire Hathaway has built a $370 billion cash pile. Sven Carlin notes that this suggests the stock is currently near fair value, prioritizing defensive compounding over high alpha. At the same time, the team at Everything Money is flagging extreme concentration in the S&P 500, where just 5 stocks now represent 25% of the total index value. They warn that such a top-heavy structure raises the risk of a lost decade if these valuations begin to derate. As we look at the takeaways, the systemic vulnerabilities in Europe remind us why the current technical floor is so critical. For the S&P 500, that floor is anchored at the 6,700 to 6,800 range. FX Evolution suggests that dense option strikes are providing a buffer here, but a clean breakdown could trigger a cascade towards 6,600. To confirm any real recovery, Nana recommends watching for the VIX to stabilize back below 20. Markets remain highly data-dependent in this high-tension environment. Watch the technical floors and priority items on your screen as we head into the next session. All sources and levels are in the description. Subscribe for high-signal recaps. Daily Digest out.